Hello and good morning everybody. Welcome to the Gold and Silver Club end of week review presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. So this live session will cover an end of week summary for gold, silver, oil and commodity currencies. We will be looking at the top trades of the week, live market commentary and technical analysis, and also looking at the key events looking forward in the week ahead, of course answering any of your questions as well. So it's been quite a phenomenal week on the markets, plenty of opportunities to be shorting gold and silver this week, as it looks like gold is going to be heading for its worst quarter in 45 years. So we'll be covering that in quite a lot of detail as well, so certainly lots to go through today. So gold broke just yesterday the 1,200 level, headed for worst week in 30 years. Gold price dropped sharply just yesterday on Thursday and hit another fresh 3-year low below $1,200 an ounce. Spot gold fell by 3% to a low of $1,179 an ounce, its lowest since August 2010. Overall, gold is down 15% since the beginning of last week, and it's headed for its worst weekly fall since 1983 and worst quarterly performance since 1968. So the steep price decline coincided with remarks from Atlanta Federal Reserve President Dennis Lockhart. Lockhart said in a speech that the Fed will eventually reduce its balance sheet, i.e. quantitative easing. He also said there are no inflationary problems on the horizon, adding that it's likely the Fed will start looking at raising interest rates sometime in 2015. So there is no doubt precious metal investors at the moment who own the gold, physical gold and silver, are certainly taking a big whipping at present. Whilst traders like ourselves are once again reaping huge rewards, unlike everybody on the call today, in what can only be described as one of the most lucrative months of the year for traders. So this week gold has moved an average of 800 points, creating a number of highly profitable trading opportunities, which we'll talk you through in our top trades of the week. And looking ahead, the big question now is how will gold and silver prices go moving forward this week? So I'm Phil Carr, professional trader and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. I'm also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And it's through his first-hand relationship with some of the world's most successful traders he discovered the formula, the mindset, and the tools that give any individual the definitive edge to trade in any economy. He also regularly writes for a number of global business and financial publications, and we've both appeared frequently on financial television. Here's ourselves recently on Dukascopy Swiss television, giving our views on the gold and silver market and some of the recent press, global press that we have been in. Okay, so we're going to move across to the gold price. So looking at gold price right now, looking at interesting $1,204 per ounce currently. And we'll have a look at our top trades of the week. So using the Gold and Silver Club's signature trading strategies, these are our top trades. So we had at the start of the week on gold, we broke through another consolidation zone there at $1,269 an ounce. We found some support at $1,276. Once we'd broken through that, further confirmation, carrying on with the downtrend the trend is most definitely our friend in gold at the moment, and we came out of that at just $1,227 an ounce, which happened to be the November 2009 resistance level. So we came out for 240 pips on that, so the risk was 60 pips, so $600 risk to make $2,400 on each lot traded for a nice 4-to-1 on that trade. WTI oil created a nice buy opportunity midweek at the 93.90 level there, where we came down to test key moving average, and we also found support at a Fibonacci level, and from there we had a nice move at 93.90, capitalizing on a quick 2-to-1 just for a day trade there, taking the profits just literally within a few hours on that trade at 95.60, so 170 pip move, 79 pip risk on the trade, so each lot traded $790 of risk to make 1,700 pounds there, 170 pips. So a quick 2-to-1 on crude oil for a WTI oil for a day trade. USD Canadian dollar, which as you all should know tends to move the opposite direction to gold and silver. We also had a nice setup, sell short setup, just a quick sell short setup for 82 pips there again for a 2-to-1. This is on Tuesday evening that we started to see this setup occur at resistance, horizontal resistance, and a trend line. You've got the nice candlestick set up there also. So entry was 1.0519, came out at 1.0437, 40 pip risk on the trade. Each lot traded $400, and for 82 pip reward there for 82 pip profit for $820 profit per lot traded for a quick 2-to-1. And then we also had another opportunity to get into gold. This was on Tuesday morning this week, no, Wednesday morning, sorry, this week. And this was when the price came down, tested that previous resistance level of 2009, the 1,227 level thereabouts. We found the profit taking obviously from all the sell shorts at that level. Again, you know, if you're doing counter trend trades on gold, you don't want to stay in long. You're going to be in and out of these very quickly. So we just got in at 1,231. We had confirmation of a bounce on that market, got out 1,245, 140 pip, 140 points on the trade, 70 point risk, 140 points profit for a quick 2-to-1. And then we had just yesterday, actually, this is a nice pending order which triggered for us yesterday early evening as we broke again another consolidation zone. So we didn't hold on to 1,224. Price came down, we broke that level and just came out very simply automatic take profit actually at 1,200 for a very quick day trade. This was just over 200 pips there, 210 pips. So 100 point risk on that trade for 210 points profit. So 2-to-1 again on that, and it's been very much like this pretty much all week. Very simple to get your quick day trades in and out of gold. So we've had some really nice moves. Obviously we broke down to the 1180 level overnight, and we're back at 1200 today. So you just want to be very quick with your day trades on gold at the moment, or staying with the overall downtrend. You can hold on to longer term positions, but you can rack up often more points just by getting in and out of these markets nice and quickly. Okay, so with that, I'm going to move on to some live technical analysis. We will have a look at the charts this morning, looking at gold, silver, crude oil, WTI oil, and the commodity currencies. Okay, so just going to flip over to my screen, so bear with me. Before we go on to the charts, what I want to talk you through, I'm going to show you, just go through my Thomson Reuters, the Gold and Silver Club workspace. So we just want to have a look at this. Gold set for worst quarter in 45 years. Copper and oil hit too. So I'm just going to move across. I want to have a look at the US dollar index here, just to the bottom right. So what I'm going to do, this is the US dollar index, and we can see as gold and silver, and some of the other commodity currencies have been hit, we've got this huge gain in the US dollar index. And US dollar index, as that gains strength, you often see weakness in gold and silver, and that certainly occurred at the moment. We've had a really big rally since last Wednesday's Federal Reserve announcement, where Ben Bernanke stated that they're looking to taper off quantitative easing in 2014, and we've had further confirmation this week of that as well. So that has caused the US a lot of money to flock into the US dollar. Other currencies pegged or paired against the US dollar have weakened, and this just seems to be continuing today with a hammer on the US dollar index. So I'd watch for potential weakness to continue in the commodity currencies and gold and silver, certainly to possibly today, if that continues to rally up to the 83 level, above around the 83.4 level with the US dollar index. And yeah, so that's what you can see what Reuters just coming out, a lot of news here with gold on, you know, heads for worst quarter on record. So you know, there's a lot of negative sentiment on gold currently. Okay, so with that, we're going to go and actually, first of all, we are going to look at WTI oil. So WTI oil looking very interesting. So here's the trade we took earlier on this week. So we had this nice, you can see a nice hammer set up here, and we've had some other confirmation to go long this particular pair. So we come up to an area of resistance now on WTI crude oil. So I'll be very interested to see whether we are going to find we're going to run out of steam and start to see this price just reverse and come back down again back towards the 92 level of support. So WTI oil keeping a very close eye on currently to see if we are going to get a sell short setup at resistance there, or whether we're going to break out to the upside. So we are at a event area just this morning, and I'm quite happy with how quickly this price has managed to just rally from area levels of support. We came to the 92.59 level and found support, strong support there, and also came back and retested 50% retracement level, 93.89, before we rallied to the upside again, giving us two opportunities actually to get into WTI oil over the last week and take off the table in the region of about 250 pips. So that's WTI oil. Similar situation with Brent crude oil at the moment. So we're seeing not as much of a rally, but we are seeing we have seen a similar move, and we bottomed out again at quite a predictable level of support, 99.69. So that's more or less the third bounce we've had from that level. So we've got 1, 2, 3. Pinpoint accuracy pretty much there at 99.70. So that tells us that essentially you just got institutional or hedge fund orders just probably going in at that level, buying automatically to see the price just get rejected so cleanly there. What I'd be looking at now is potentially a rally back to the 105 level here on Brent crude, see if it gets to that level, and then see if we start to see the price turn around again and come back towards support. Very much just channeling sideways at the moment on both WTI and crude oil, currently offering a lot of nice opportunities to day trade. Next market we're going to have a look at, okay, so we're going to look at gold. So gold, I'm just bringing you out to the monthly time frame at the moment. So this is what you want to have a look at really on gold, because now we're getting to some serious technical damage has been done on gold. You want to look out on the weekly. So I'm eyeing the 1179 area where we got to, more or less got to overnight. So that was going to be so key resistance and support level going back to 2009. So that's the next level I'll be looking out for, and if we break that, I would be looking as low as about 1050, 1038 to be specific, but around the 1050 area if we continue to sell on gold into next week. So I'll be watching those key levels going out on a much larger time frame. Going out into the shorter time frame here, obviously today we did get rejection at 1180 there, so we got like this doji forming at the moment. It's not very convincing at the moment. So that's about a 200 pip move since it bottomed out 1180. I just don't like this so much because of the fact that the US dollar index is rallied quite substantially. In fact, let's just pull this out. We need to adjust that. If we do get a bit of a rally here on gold, and we can see the level today cleared of about 1211, I would be looking maybe for a short-term counter trend trade. This market might be able to get back up to around the 1250 level here, which would be a 61.8 retracement level, I believe, on this, actually no, 76.4 on this particular move. So that would take us to around $1,256 an ounce before possibly we see the next wave down on gold. But definitely I don't necessarily think this market has bottomed out yet. We will start to get seasonality, which I'll discuss on webinars in July. As we start to go into July and August, we should start to see seasonality kick in. But at the moment, May and June are typically very weak months for gold anyway, and we could have further downside. So be very careful about trying to pick a bottom in this market at the moment. It'll be more interesting in selling into any rallies back up towards the upper end of resistance there, which is going to be around the 1250 level, or possibly the price may be able to get as high as 1322 if it did rally over the next week or two. But those are the key levels that I would personally be looking at. And at the moment for gold, silver doing a little bit better, not much better than gold, but you can see today we've got a bit of a rally which has been capped around the 1894 level. Very much we're in this downtrend on silver, so that's pretty straightforward to draw on your chart. You can see this downtrend, which we've been in since April really. We've had some big moves to the downside. So we have just come up to a horizontal line of support there, 1815, and we've also come up to this trend line support level. So I'd like it to clear 1893 now, which is a key price level, and the price could be able to, may be able to rally if the US dollar weakens, might be able to come back up to the 20 to 21 area. So I would look at all these key levels here on that I've got on my chart to see whether the market can put in a bit of a rally. But any rallies back to this downward trending resistance level, we're potentially looking to sell into the overall downtrend again on silver. So silver's had a big move down as well. Obviously now we're at 1813, so we've had some very significant moves. If you go back to even to May, the earliest part of May, we're at around the 24 level. So we've moved quite significantly on silver as well as gold. So I would be keeping an eye on today this bullish candle which is developing, but I'd like to see the price break above really the 1900 level to get interested at all in taking a short-term day trade on that. But at the moment it's putting in a little bit of support around the 1815 level. Now we're going to turn our eye to the commodity currencies. So Australian US dollar, you know, very similar situation in a massive downtrend. You know, it's correlated to gold and silver. So Australian US dollar in a downtrend as well at 3-year lows, and I would be looking at the moment potentially more weakness just to come back further down within this trend channel at the moment. So I'll be looking at this potentially to just come back down, and we'll see whether it just comes back down to the lower end of this trend channel. Continue. You've got a bit of weakness this morning. You've got some inverse hammers there, so I'll have a look at to see if the price does come back within that downward trend channel. New Zealand US dollar faring a little bit better, I think today, and it's starting to still within a downtrend as well. You've got a downward trending channel, but it's doing slightly better than Australian US dollar, so a little bit of strength in New Zealand US dollar today. I'll be interested to see if we're going to be capped again at this downward trending, this resistance channel, and possibly look to sell into any tests of that resistance on New Zealand US dollar. And also looking at USD Canadian dollar, that we've come up and we've retested that upper level of resistance. So we are definitely upward trending on this market, so any counter trend trades, you just want to be in and out quick. At the moment we've seen the price come down, retest the 1.04467 level, find support there, well around 1.0414, find support at this key level, and the price is just chopping about and consolidating at the moment, although we've still got this kind of we still seem to be selling off from resistance. We haven't come up, the buyers aren't really able to push this market much higher at the moment. Going to the weekly, you can see that we are at some the 2013 high at the moment, but we're unable to break through that. So we I'll go into the tighter time frame on that and just have a look. So we are starting to move slightly down on USD Canadian dollar and chop a bit sideways. So I'll be very interested to see if New Zealand US dollar can break through the 1.0414 level, in which case there's not a lot to support it until we come back down here to the 1.0245 level, which is going to be about a 180 odd pip move, possibly more. Let's have a look. Yeah, about 180 pips, if that was to do that. But if the US dollar index gains strength, you'll probably see this follow through with USD Canadian dollar as well. So watching that very closely. There's lots looking at today on both crude oil, WTI oil in particular, gold and silver, and the commodity currencies. So certainly, yeah, lots to have a look at. So what we'll do now is just check to see if there's any of your questions have come through. Yep. Okay, great. And what we'll do, we'll look at the key news announcements coming out today and into next week as well, which should certainly give you a good indication of what we can expect for the week ahead. Okay, so what I'll do, I'll bring it back to the news for the week ahead. Okay, so in terms of news this week, or next week. Next Monday at 3 o'clock we have the US ISM Manufacturing Index, and that's the Institute of Supply Management. So the Manufacturing Purchasing Managers Index, PMI, rates the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventory. So that data is compiled from a survey of approximately 400 purchasing managers. A level above 50.0 indicates industry expansion, below indicates contraction. So a higher level than expected, or higher reading than expected, should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. So that's going to certainly have some impact on gold and silver on Monday at 3 p.m. BST, GMT. Next Tuesday at 5:30 a.m. we have the Australian interest rate decision. So Reserve Bank of Australia board members will come to a consensus on where to set the rate. Traders watch interest rate changes closely, as short-term interest rates are the primary factor in currency valuation. So a higher than expected rate should be taken as bullish for the Australian dollar, while a lower than expected rate should be taken as bearish. So obviously that's important because of the correlation with gold there with the Australian dollar as well. Next Wednesday at 1:15 p.m. we have US ADP non-farm employment change, and that measures the change in the non-farm private employment based on payroll data of approximately 400,000 US business clients. That release is 2 days ahead of government data. It's a good predictor of the government's non-farm payroll report to come on Friday. So that change is an indicator, can be very volatile for the markets as well. So a lot of news coming out next week, particularly next Friday. Wednesday next week at 1:30 we've got the US trade balance. So that measures the difference in value between imported and exported goods and services over the reported period. Positive number indicates that more goods and services were exported than imported. Higher than expected readings should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Next Thursday, 12:45 p.m. we have the Euro interest rate decision. So the 6 members of the European Central Bank Executive Board and the 16 governors of the Euro area central banks vote on where to set the rate. So traders watch interest rates very closely, as short-term interest rates are the primary factor in currency valuation. So a higher than expected reading is bullish for the euro, while a lower than expected reading is bearish for the euro. So that's important because the euro, you've got the correlation there with gold. When you get a lot of euro weakness, you tend to see that weakness in gold, and the dollar strengthens. So that's the correlation. Next Friday, 1:30 p.m, the big one, US non-farm payroll. We'll be doing a webinar in the morning as well. Before that at 11 o'clock BST. So we'll be looking ahead of what we are expecting. So US non-farm payroll measures the change in the number of people employed during the previous month, excluding the farming industry. So job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And for those of you who are joining the webinar a little bit later, I mean, this will be recorded, so definitely worth rewatching if you missed the first part. But the big news being gold set for worst quarter in 45 years. So that has provided some very lucrative trading opportunities this week, and I'm sure will do moving into next week also. Okay, well, if you'd like to request any information on our gold, silver and commodity courses, and our live trading programs as well, you can just go to www.jointhegoldensilverclub.com, or very simply contact us at email office@thegoldensilverclub.com, telephone our London office on 0207 193 0403, or our Asia Pacific office on 852 8191 0403. And simply to do that, when you go to www.jointhegoldensilverclub.com, you will have complete the form to request information there. Okay, fantastic. And of course, make sure you subscribe to the newsletter at www.thegoldensilverclub.com to receive free weekly gold, silver, oil and commodity currency news, live market analysis and prices. Okay, fantastic. Right, guys, well, I wish you luck for the rest of the day's trading, and certainly for next week as well. Any questions at all, do get in touch with us on the details supplied there on the screen. And yeah, we wish you all good luck for the week ahead, and we'll see you here same time next Friday at 11 o'clock. Okay, guys, take care. Have a great weekend. Cheers. Bye-bye.